Hey, welcome to the space where we talk about money, investments, and securing the bag. This month, being International Women's Month, we are launching our campaign, Own Her Wealth, where we will be encouraging women to take control of their finances. I'm your host, Julie Kamau, and with me is none other than
Belinda Koome.
You can tell us about yourself, who you are, what you do.
So I'm an investment advisor and I also do investment training, or you will call it financial literacy.
Since you've been in the game for a minute, if you were 20 again and you had 100,000 just chilling in the bank, how would you flip it into something long term?
Okay. I like the Gen Z vibes, eh? Been in it for a minute. One word, diversify. 100,000 diversified today, for example, if you call it 50-50%, 50-50, yeah, or 50% and 50%, that's 50,000 and 50,000. You could put 150,000 in an investment that has a typical higher return, and then you could put another investment that has not very good return, but it still gives you some sort of return. Why am I saying this? When you put 50,000, you have the 100K as a youth, you're 20 years, let's say that. So you're 20 years old, you put 50K in a high return yield. High return, we can give it, say, current market, even 15%. Give it 10 years. Do you know how many times that money will double? There's a rule called Rule of 72, and I'd like every one of our viewers to look at it. And it gives you the different ranges of interest rates and how long it will take for money to double. So, for example, if you put an investment of the 15%, you find almost every 5 years the money is doubling. So you're 20. Let's go back to you at 60. How many times has that 15% doubled? We are assuming you have been able to manage 15%, and you can get that from the stock markets. You can get that from the alternative markets. Then the other 50%, you want it to be a bit safe. Okay, let me not say safe, but a bit lower return, and there's less risk to it, because if you put in shares today, you can put in a stock today, and yes, it can give you 15%, but we know the same price you got in at today could move, and in another week's time, the price has gone down, and if you don't buy it again, then you might not be able to recoup if that price doesn't turn around. So yes, split it into two, high return, and the other one doesn't have to be very high return, so that you can get that ability to double your income or your money over multiple years and over multiple times. Yes.
What's the biggest financial mistake that you made in your 20s that you would warn someone else about?
For me, it was doing the opposite of what I just gave in the previous answer, diversification. I think I went, much as I knew about diversification, and I've always operated in the financial industry, I was more comfortable. I looked at my money and I was like, okay, I'm starting at what is my income? Why do I want to diversify? Let me remain in one spectrum. And that didn't work very well for me. So that's the mistake I will talk about. Yeah.
So were you able to recover? Did you learn new things to, not repeat the same mistake?
It's very painful when you're seated across a couple of clients and you've told them to diversify, and you actually see the seeds and the harvest, and then you remember, my goodness, I didn't do this a couple of years. So yes, I did recover, but of course there was lost time. But then there's this concept I tell someone, even when you're across me and you're saying, okay, I lost this time, I lost these opportunities, maybe I'm beyond my 20s, I'm in my 30s, 40s, or 50s. I say the best time to invest, or the best time to do a good portfolio which has different investments or diversified investment, is yesterday. The next best time is now. Can you start now? And that's what I also had to apply, that I start from wherever that time was, whatever my now was, I had to start and start changing slowly. Yeah.
Okay, that's really inspiring.
Thank you.
What's one final piece of advice which you would give to your younger self?
Start early. Starting early gives you a lot of advantages. even if it's an insurance cover, and we talk about wealth growth, we've actually, most of our time right now, we've spent on growing your wealth. But it's also something about wealth preservation. How are you preserving your wealth in case of any unknowns? So when you start early, and for example, take a life cover, and you're in your 20s, and somebody else in their 30s, 40s comes and takes the same life cover, they'll pay more than you will pay, you who started at 20. You started 20 years ago to save 2K, and somebody else starts at in between there to save 2K. You know, there's a difference. Even if it's an investment that's compounding, there'll be a very big difference. So start early and start now. Don't look at the little money as little money. Put it aside, let it grow, and also be consistent. It's not a thing of what's the next best interest rate, what's the next best product. It's what do I have now? Where do I want to go? What are those aspirations? How to diversify, maybe even into 2, then you go into 3 investments, like that. So have some consistency in terms of the way you decide. It's not just jumping into the next big thing, but also be consistent in putting aside money and making sure that it's employable. Yeah. So you've put aside money, you've saved it, yes, but you've also invested it. So you've employed that money to earn more money. Yeah.
Okay, thank you.
Give. By the way, we don't talk about giving. We are in the Women's Month, right? And Women's Day is just here with us. Giving is another thing that's nurturing, that women do. We are just built to nurture, and nurturing is all about giving. Also remember to give, because as you give, you're building a community. It could be giving in kind. What knowledge do we have? It could be that was something I would tell my younger self and others. Give in kind. What are the skills do you think will benefit the community and society you're in? Or even give your cash, yeah, to a certain percentage. Yeah.
Thank you for your advice. And that's a wrap for today. I hope you've learned something new. And if this conversation has moved you, please share with a friend. Thank you.